Hello and warm welcome to Business-Indonesia's From the Archipelago. My name is Andro Wisnu and I'll be your host for this episode. Indonesia's economy is facing a period of transition. Budget cuts by the new government have dampened consumer confidence, while global instability, fueled by U.S. tariffs, adds further pressure. Amid these shifts, digital banking is emerging as both a solution and a challenge for the financial sector. Joining us today is Mr. Samir Dhamankar, Head of Global Transaction Banking and Security Services at Deutsche Bank Indonesia, to shed light on how these developments are shaping the economy. Mr. Samir, please introduce yourself.
Hi, my name is Samir Dhamankar. I head the corporate banking business for Deutsche Bank in Jakarta. I'm based in Jakarta, so Thank you for having me.
Thank you, Pak Samir, for coming to our podcast. I want to start first with being transparent with you and also our audience. When we scheduled this podcast, we scheduled this weeks in advance, and so many things have happened in the weeks already. I'm referring, of course, to the Trump tariffs, which has led to escalating tit for tat in terms of tariffs between China and U.S., perhaps even a glut of Chinese goods flooding into the Indonesian market, and not to mention the big topic right now, the dumping of U.S. Treasury bonds. How would you describe the state of the global economy right now, and even Indonesia's economy in facing these developments?
So, of course, all of us are definitely going through interesting times.
Yeah.
So I would use the word interesting, the way global economy is. Right. So for the last, I think 5 years at least, we have seen some interesting changes to the global economy in response to, at that time, the COVID challenges and the lockdowns and the disruptions that followed.
Yeah.
There were specific and very credible actions in the corporate segment among the companies, manufacturers, even service companies, and such as ourselves, banks as well.
Yeah.
In building up resiliency to challenges such as COVID or global disruptions of supply chain, and that trend has been there for some time, right? Just that the tariff has added to an angle of urgency. So in that sense, I would say that this only accelerates the change that we have been seeing over the last 4 years. Obviously, since this is an action from US towards the rest of the world, and then the rest of the world obviously may have some action in response or reaction to these. We still don't fully know the effect is still being worked out in the global economy.
Yes, the impact.
Indonesia will not be different. Obviously, Indonesia is the 10th largest economy in the world, one of the G20 countries, and obviously quite well connected to the global economy in this sense. And therefore, Indonesia will also have to go through certain challenges, some adjustments, right? But I do think it is a trend which now we need to kind of focus more on in a way that the economy has opportunities as well as threats that such changes create. So we focus on opportunities for Indonesia that it brings.
Okay. Well, that's great. Speaking of trends, what, from a banker's perspective, that's just one trend, yeah? There's several trends, I'm sure, and I'm sure you're familiar with. From a banker's perspective, what trends do you see will shape the Indonesian economy moving forward then?
Yeah, true. So Indonesian economy has always had certain strengths and certain areas of concern, right? And these trends affect all of that. A trend for Indonesia, which has been there like a secular trend for multi-year trend or a long-term trend, is obviously the demographics. Indonesia is a country with a young population, a very high percentage of working population as compared to the overall population, and that has brought a lot of tailwinds for certain businesses such as consumer-led businesses, technology businesses. Indonesia has more than 100 million internet users. That's one of the highest in the world. In that sense, the demographics has been a trend which has been important to Indonesia's economic growth for quite some time, and that will continue. I think the population will remain young, and a very large proportion of working population, and in that sense, that affects economics quite significantly. The other trend, which is very important for Indonesia, is, as I say, reshaping of trade corridors of the world. Right? We have already seen over the last 5 or 6 years, Indonesia being benefited by the global change in supply chains.
Okay.
In terms of corporations or countries trying to build resilience or diversification in their supply chain, and Indonesia in particular, and obviously ASEAN countries in general, have been beneficiaries of that trend of building resilient supply chains, and that trend is also very important. As I said, apart from resiliency, which was already there, now tariff is another reason for the same trend to really accelerate.
Yeah, that's true.
And I think Indonesian economy has some opportunities in that area, in my view, to grow.
Would you say we're well positioned, or Indonesia is well positioned among the countries that are well positioned to?
We are well
Gain.
positioned. In terms of geopolitics, we are definitely well positioned. In terms of Indonesia's position in the overall trade chain, we are very well positioned. ASEAN is one of the regions who has very good trade relationships or trade pacts, let's say, not only within ASEAN, but also countries such as China, countries in Northeast Asia and Europe, right? And that, in that sense, ASEAN, and therefore Indonesia as the largest country in ASEAN, is actually well positioned to benefit from it. So it's a positive trend for Indonesia.
Okay. As a segue to our following question, from a banker's perspective, as in the financial sector, that well positioned, how is the banking sector? Well, how is the banking sector positioning itself within that context? Is it also things are going well for the banking sector right now in Indonesia, or middling?
So, in terms of Indonesia as an economy, actually fiscally quite stable economy, right? And it has one of the better balance sheets, I would say, among the G20 countries. So, in that sense, Indonesia is a better position for the financial sector. And banks have been bringing more capital to this country because the opportunity it presents. And I think the latest changes that we are seeing only means for us no change in the overall commitment to Indonesia in terms of capital and in terms of resources to grow. I think the latest changes would only mean readjustment, because what will happen is some sectors will actually be positive and some sectors may be negative, depending on not only the tariff from US but also competition among the producer countries right, within this region, and therefore banks would have to select carefully which segments, which companies they want to finance, right? But overall position for Indonesia would be a positive stance where additional capital and additional resources will be deployed.
Okay. The stability, it has been somewhat, I suppose, it's an open issue that there are possibly liquidity constraints in the market right now, stemming from budget cuts, and also the current, as you said, developments that are happening globally. Does this affect banking operation and lending processes? As you said earlier, it's just readjustment. Is there a big effect?
As I said, fiscally, Indonesia is actually one of the better off countries.
Okay.
But of course, we are in a resource constrained environment where, let's say, policymakers or the government would like to readjust their priorities. So there could be budget cuts or, in certain area, while there will be more spending in certain other areas, right? So Indonesian policymakers have actually published very detailed vision document, right? And they have these 8 priorities for the country. So we would say that this is more a readjustment of where the government stimulus is going to go in the economy. For Indonesia, government sector remains the largest corporate sector. The state-owned companies are a very large part of the economy, and therefore, obviously, the government policies and focus areas make a difference to the larger economy. So we have seen very stable GDP growth for the last several years. Towards late last year and beginning of this year, we have seen a little bit of slowdown, and obviously with the with the new tariff threat coming in, it will take some time.
That's actually kind of for a lot of people, it's a worrying trend. That's why I suppose, but as you said.
Yeah. So it has been slow last few months already. And because global uncertainty is built in, corporates, producers or consumers need to adjust their plans. Right? And obviously right now, I would be the last person to say, okay, we can predict what is going to happen 3 months down the line. And that's obviously true of any company who's planning. There is a production, their sales targets, going through a little bit of uncertainty. And in that sense, I would say we are already observing some slowness in the activity in the economy. But in my opinion, that's a temporary wait and watch.
I see.
Obviously, people have to manage their finances, manage their productions and supply chains in the new reality. So we would say that for banks, we will see a little bit of lower activity, lower use of, let's say, facilities.
I see.
Our clients. Maybe lower number of transactions, while everyone around the world, as Indonesian companies, multinational companies which are in multiple locations, including Indonesia, will go through a period of review and readjustment, and then we pick up pace after that. So I think right now for bankers is more, advice. Clients would want our advice in terms of how better manage their liquidity.
It's also products you can offer. It's also things that you can do.
Also, as their focuses changes from this country to another country, or let's say their customers change from one country to another, there would be in need for advice in terms of how the capital deployment changes, and therefore what banks can do for them. So I think we are in a phase where everybody needs advice and everybody needs to readjust, and as bankers, we support that process.
Okay, yeah. That's one service that at least we are thankful to have banks for, right? Okay. Speaking of bank services, there's a rapid rise in digital banking.
Yeah.
How are traditional banks? Well, traditional as in, Deutsche Bank is a very, has a long history. And I'm sure that there have been periods where you have to adjust to developments in the technology, in consumers' preferences. But in particular for digital, how do traditional banks ensure they remain competitive and meet this changing consumer expectations?
So digital economy and the digital ways of doing things obviously change everybody's life, right? And the change in Asia is far more pronounced than anywhere in the world because of the youth and greater penetration of not only internet but mobile phones and devices which allow people to connect and consume services on the internet, right? So in that sense, this has been a very, very important change for banks and their customers. So Deutsche Bank has been growing a lot in this region, and obviously in Asia Pacific, if you're growing, then digitalization is absolute must, and we have been investing. We are a very old commercial bank, right, with a 150-year-old history. But yeah, we have invested a lot in technology. Of course, we don't directly deal with retail customers. In Indonesia, for example, our business is corporate. But that impacts us because our clients who are corporates, their customers' behavior and the way they consume or order products.
They're also using digital technologies.
Digital exchange. So we have been actually investing in electronic banking and electronic channels, which allow our clients to kind of efficiently change into a digital ecosystem rather than a physical one, which they used to earlier go. I think there is, as there's a critical mass, right? So there is a point at which digital, a particular change becomes more powerful than the old.
Especially during COVID.
Absolutely. So because of COVID, that critical mass was
reached, sort of, yeah.
And now I think digital is only a matter of time where most corporations will see their digital channels of doing business dominate completely, and physical channels kind of disappear eventually. Yeah. So we then invest in that, right, in making sure that our customers get the digital backup that they need, from banks. One example I can give you, for example, is that a lot of travel bookings, for example, now happen online. Nobody goes to a travel agent anymore to buy tickets, right? It's all internet. So some of those travel companies would then need instantaneous payments because people are paying online using various, wallets, QR code,
Methods like
many,
that.
many mechanisms, and their banks to then be able to support them.
Yes.
Not only accept payments, but then make that liquidity being available to them instantaneously, because they need to kind of pay their suppliers. So I think this is just one example how whole industries have been changed, and banks have been. We are like the plumbers, in the payment flow, and obviously we have adjusted.
That's probably a very accurate
But for us,
metaphor,
I think
allegory.
for traditional banks, not only is about connecting to the digital ecosystem, but it's also about safety.
Yeah.
Because we invest a lot in making sure that our information security is very strong. We as a European bank obviously have a very detailed regulations to meet, but also every country, including Indonesia, has very detailed regulations for banks and financial institutions in terms of their behavior and reliability when it comes to digital or internet-based
Transactions, yeah.
So this is very important to our clients, the fact that their data is protected when, it's being processed online, and protection from cyber attacks and fraud risks, right? Because there's no longer the face-to-face interaction with the customer is now just almost history, right? So I think in that sense, that part of the ecosystem is very important, and banks like us are playing the biggest role in making sure that the backup for payments and all is safe and reliable, not just fast, but also safe.
What would you say is what would be a good example of Deutsche Bank digital product or digital service that you're most proud of? Is there anything?
So we for example, again, I think just for ease of understanding, I think travel booking is
that's one, a
better one.
It's probably a widely used one as well.
And where the entire chain is now digital, in the sense that you are, let's say, want to travel to Japan, then you would go to a travel website and search for hotels and, let's say, book a hotel. So while that booking happens, in real time, because the hotel is accepting booking in Japanese yen as a currency, while the customer is based in Indonesia and paying in rupiah. So you need an instantaneous price, right? Because you are booking instantaneously online. What is the price that the hotel is going to charge? When are they going to debit their account? Or when maybe instantaneously you pay by credit card or some other digital channel. And this instantaneous settlement then has to go back to the travel company, because they would then have to pay the suppliers. The actual money needs to go to, let's say, the hotel or the booking website through which hotels are booked, right? And then you book airline tickets. So the ticket confirmation is instantaneous. So you might be paying for tickets in a currency which is other than what
you hold.
What you hold. So again, the conversion has to be instantaneous, and obviously you need instantaneous confirmation. It's not like, okay, book and you wait for your ticket. No, ticket comes by email, in 30 seconds, right? So I think that's a good example. All of this enablement of payment for that transaction. The transaction is you purchasing a hotel room or you purchasing a ticket. But the transaction to go through, there has to be a payment leg to it. And that payment leg may include multiple countries, cross-border payment, currency conversion, fees which may be different, right, for each of those channels. And then settlement also instantaneously, because people want to have their confirmation right there that, okay, you have a confirmed ticket. So I think that's a good example of how a change in the digital ecosystem has completely changed, let's say, Deutsche Bank's way of supporting their travel agent as our client.
And that's certainly one, let's say, advantage Deutsche Bank has, being a 150-year-old a bank with a 150-year-old history that has built trust between its customers and with other entities across the world, that you can conduct these transactions, these currency exchanges so rapidly, and also using digital technology to support that.
So for us, what is important for us is that as the speed of transactions, speed of buying, selling by clients and their suppliers or corporates. The speed has changed completely because it's all digital. So obviously the speed of money, payments, and capital management has to undergo that kind of change. Whether it is working capital management, whether it is liquidity management, or just payments and confirmations, the speed has to be completely different now, and that's the part that banks like ourselves have been able to support our clients with.
And Deutsche Bank, do you think, has risen to this challenge in competition with the other banks as well?
No, absolutely. So I would say banking sector has, or the financial sector in
Sure.
general, has done a good job of enablement, right? And obviously, while we don't deal directly with the retail clients, obviously retail banks have a far bigger ecosystem to manage in that sense, while we manage ecosystems for corporate clients. I must say that while the change started in the consumer sector, consumer-driven companies, it has now percolated to even
Corporate, yeah.
the corporate sector, where they don't, even corporates which are B2B, let's say business to business, also has become largely digital. So in that sense, Deutsche Bank is actually played a very good role there.
Okay. This is my last question. Looking ahead, what, in the context of financial sector and its growth within the Indonesian economy, what opportunities and challenges do you foresee? And how should banks position themselves?
Okay, that's a great question actually. So for Indonesia in particular, there are very distinct and very long-term secular opportunities, right? As I said, as trade corridors change, Indonesia is going to play a bigger and bigger role, right? So that's an opportunity for everyone. Our multinational clients, for example, which increase production in Indonesia, right, or increase their platform or investments or their presence in Indonesia, presents a distinct opportunity for banks in Indonesia to fund those changes, right? Natural resources has always been a strength for Indonesia.
Okay.
Right? And as one of the government's priority going forward is the downstream processing of natural resources within the country, and then exporting them. There would be a lot more opportunity for companies to come in that segment, right? Processing of natural resources and creation of more value-added products. So for banks, that's a very important area of opportunity. I think infrastructure is also a very important one, and government has already announced several areas of infrastructure development, and I'm not just talking about the new capital city, but also logistics, ports, train and road linkages among cities, and digital infrastructure as well, data centers, more internet bandwidth for the growing digital ecosystem in Indonesia. I think that presents a great opportunity, right, to finance infrastructure projects, finance or provide working capital as well as payments infrastructure to companies which are growing in that segment. Financial markets provide an opportunity as well. Within ASEAN, Indonesia has Indonesian listed financial markets, for example, are $1 trillion market, which is largest in ASEAN. And in that sense, the interest of financial institution in Indonesia remains robust, and there is an opportunity there for banks to play a role. Deutsche Bank, for example, is one of the largest banks in providing foreign exchange convergence, one of the largest banks for providing trading services, custody services. So I think in that sense, there is a big opportunity for banks. But I think the important thing to note is that it's always true, but it's more true today than ever before, that uncertainty. And just as we talked about how corporate and consumer behavior in a digital world has dramatically changed in speed, uncertainty also is now very fast.
Yeah, it's very prominent.
And in that sense, banks have to position themselves to carefully select segments or sector to do, because we have to be very vigilant in terms of how these changes bring risk to certain sectors of the economy. So we have to be careful.
Okay. So I can say to end this podcast is that Deutsche Bank feels things are still moving at a good speed, but that vigilance amid this uncertainty is probably a priority and should probably be a priority for everyone as well moving forward. Yeah.
Absolutely.
Even in terms of
so we continue to believe in and commit to Indonesia's growth. But like in any other country, here also we have to be just careful, of steering our growth in the correct direction.
Okay, well, that's a great answer, Pak Samir. Thank you again for coming. And thank you to our audience for watching. We hope that you have been able to learn something new from this short discussion. If you'd like to see more of what we do, please visit our website. Don't hesitate to contact us and give us your feedback or email us on the topics you'd like us to cover in our future podcasts. Make sure to like and subscribe. This has been from the Archipelago. I've been your host. This has been Pak Samir addressing our questions. Tschüss.
Thank you.